Hi guys, welcome to WIC channel. My name is Rifad. So today we'll be talking about a stock that I've been kind of watching and following for a little while now and decided to buy that like a couple of weeks ago. So before I reveal the stock, I just want to shoot these guys out, shoot this message out to tell you guys that this is my own research, my own opinion, and this is something like I learned because I like to share my research and like kind of share opinions and talk about stocks and like all this kind of stuff because I also watch fellow YouTubers and read articles and about other people's opinions and how they evaluate a stock. So it's kind of good to share, but I always encourage people, do your own due diligence, please, and also kind of determine as per have a plan and then buy the stock and do your own stuff, right? So you can have a plan and so you know why you invest in the company. So even if there's a downfall, you're not worried as much because you have a plan in place, motion, like you can say. So time to reveal the stocks. I decided to buy Canadian Tire. So why Canadian Tire, right? So like Canada for me, as I see them as one of the huge behemoth in Canada. So they own a lot of brands and a lot of things that you either have directly bought through Canadian retail store or indirectly through another of their brands that they do own, which is immense, right? And they're well diverse. And they're investing heavily in technology and how their websites work and how they send out their like the promotions and everything. So they're really investing a lot, and I can start seeing the fruition of them, right? And also that being said, they're investing a lot. They're not neglecting the other portion of the business, which is also the elderlies and a lot of people old, like the senior people. They do still shop at Canadian Tire, so that's the reason they do still send catalogs, and I still get one at home. So they don't kind of forget saying, oh, we're gonna completely invest in technology and screw the other side. Sorry the expression, but yeah, so not to forget the other side, we can say. So they kind of still balancing the both, which is very interesting. So people kind of like to swap through catalogs or like receive flyers and all this kind of stuff. They still do, which is very interesting. So I like them, and they own a lot of stuff, right? You can buy pretty much a lot of stuff at Canadian Tire, which is phenomenal. So you can and also their credit card is really good. They improved it drastically this year. This is one of the portion that they invested a lot in this year. You can, as per they mentioned in the conference call, right? Because they bought recently Helly Hansen. So to integrate Helly Hansen, they finalized it this year. And so that's the reason they invested a lot on that. They invested a lot on the credit card, and they invested a lot in technology. And in the conference call, they said if they wanted to kind of beef up their balance sheet and show everything is pretty, they could have just cut those off and would have been phenomenal. They've been a balance sheet, but still, I'm going to show you guys a balance sheet. It's really good still. So even in the exception of they still invested, but it's really good. They're earning per share and everything. So they kind of still were able to grow and also invest for the future, which they did. And I can kind of already start seeing the fruition. So you know what? I'm just gonna go ahead, jump in the supercomputer, and show you guys the stats that I kind of see and kind of push me through, because all they said this is phenomenal, but for me the balance sheet is one of my prerequisites as per is it worth it? Is it really good, and can they sustain it, right? So let's go to the supercomputer, and after this come to the whiteboard and finalize the whole fantastic video. So let's go ahead. Hey, welcome back, guys. So as you can see in the supercomputer, so one of the platforms I use a lot to kind of do my analysis is Yahoo Finance. So as you can see, one of the first thing I always see is the PE ratio, right? The price to earnings. So the trailing is 13.5, which is really good. When I bought it, was not on there, so but it's still 13.5 is really good. And their forward PE is also 11. That's like with the future earnings, right? So it's also still good. That's for me. Those things, anything under 15, I'm kind of like it's good and undervalued. And then Go is the phenomenal dividend, because we know a lot of Canadian companies do pay dividends, and Canadian Tire is not an exception, right? So their trailing right now is 2.81, which is kind of good, because one of the key factors I always see is their 5-year trailing dividend is 1.69, and now they're 2.81. So that's usually when that says is it's the company's undervalued, because usually when the dividend is higher than the 5-year trailing, it's usually the company is undervalued. And you can see their payout ratio is 31%. Usually 31% means there's a lot of room to grow. When they start hitting like 50, you can say, there's no much room. But companies that have like 80%, I'm more afraid, because I know that their growth room is not necessarily there. But with Canadian Tire, and also when I see 31%, I'm less afraid that they're going to say, we're going to cut the dividend, or going to stop paying dividend. This is something that I don't foresee happening because of the percentage that's 31%, right? So I'm just worried about that. And so this is something also good, is the fact sheet that you can easily get on Canadian Tire Investor Relations. Kind of give you guys an idea of the revenue, right? So year over year quarter is up 10%, which is, for me, that's indicating like, a company is growing 10% earnings, which is really good for a company that's been here for years, right? And the net income also, it went up 15%, which is also another growth area, right? And the earning per share fully diluted is $3.15. It's increased from 21%. Those are key things saying to me, this is a company that's been here for years, and a retail, and they're growing this much still. That means there's a lot of growth factors in, right? So it's really good for me. So I'm really happy when I see that it's not a retail that's growing only 3% or 4%, like a lot of retailers, that these people are growing because they have other business divisions that are kind of funding the growth. So over here, so we go back to my Yahoo Finance. So another thing is also debt. This is something very common in retail. As you guys can see, debt is something they're going to have a lot of. But the most important thing is, you should say, is, are they able to pay the debt, right? And the current ratio right now, it's $1.61. So kind of for each $1 of liability, they have $1.61. So that means they're able to meet their requirements. And another one also I kind of go through is the debt to equity. Yeah, debt to equity is almost 1-for-1 from the last quarter. Am I kind of worried? I mean, yes, but their current ratio is kind of reassuring me. So I'm like, yes and no, but they're able to meet their requirements, and I think they did. So I'm not worried. So that's kind of a thing I kind of can let go, because they're able to meet the requirements for now, and that's kind of normal for retail to have a high level of debt, right? If they're over 1 and hitting 2, then you can start really being worried. But that's kind of okay for me, as per my own opinion, right? And what else? So you have also, this is kind of the portion here I want to show you guys when I was talking. The banners that they have, is you guys can see the immense of banners that they have under them, right? From like financial sector to the healthy answer, to gas, to like, sport check, the retail portion. So everything is there. And one of the secret I find is the CT REIT, which I find it's very hidden. It's an interesting concept, as I can say, is that REIT, Canadian Tire owns 70% of it. And what happened is that REIT owns Canadian Tire or other locations of Canadian Tire. So the store pays the REIT that pays Canadian Tire. So it's a good circle that they made. So they own the property, and the property, like the store owners, they pay them that pays Canadian Tire. So it's kind of a good scheme made in a way, right? And you guys can see here the REIT segment, just year over year growth is kind of give 10-12% here, right? They borrowed in 79 million. So which is a good income, right? So it's kind of a good thing. So overall, they have a lot of growth factors. Yes, there's certain kind of concerns, like I mentioned, the debt, but aspect, and I'm worried as they can meet that. I'm not, because I think they're well stable. Their income is going up. Their revenue is going up. So for sure the debt is going to go up, because they have to kind of fuel the growth, right? And investing in the future and everything. So that's about it in the this portion of the supercomputer. So we'll kind of go to the whiteboard and finalize the whole thing. So see you guys there. Hey, welcome back, guys. So, I guess kind of showed you guys what kind of financial things I see in a company before I kind of buy into them. Which, I saw the stuff and am I kind of concerned? No, because they're growing a lot and like 20% growth. It's really good for a company that's been here for years. So for me, that's kind of reassuring. So as per growth, I see the growth of Helly Hansen, which was integrated this year. So that's one of the things they spent a lot. They spent a lot integrating Helly Hansen. They spent a lot in technology, like again I said one more time, and also in their financial area, which is for me, financial area and Helly Hansen could be the potential really growth area for them. Because Helly Hansen permits them to go globally now because they're kind of global footprint because of them. So I think it depends how they're gonna kind of pivot this. So I think this could be a really interesting development that I think that could be good for them. And their financial thing, their credit card is really good. Their triangle program is amazing, which I also personally use, and I think a lot of Canadians do use them. So I think it's really, really good. And also comes to, so it's I kind of like those kind of two areas that I kind of target. But that said, they have a lot of sub banners that which I think would continue to grow, which has proven to grow right now, and I think they will continue to grow, and they'll just support their growth in the coming years, right? And I'm planning to hold this stock like like minimum 3 years to like 5 years if there's nothing big that happens, which I doubt that will. So 3 to 5 years, and I'm getting a dividend of like 2.8% to kind of be patient with it, right? So I mean, until then I just accumulate more stocks, and just the dividend is gonna give me, instead of be patient until the whole things unveils and give fruition, right? So I think, yeah, I think it's worth exploring, and I think it's just being patient and seeing what kind of comes out of this, right? So so you know what, that's about it for this video. And once again, I just want to let you guys know this is my own research. Do your own research, do your own due diligence, which is primarily important, and learn, like. And that's it. So I mean, if you guys, and I also mentioned, if you guys have any stocks or any recommendations, just shoot a comment downstairs in the comment section. Not downstairs, in the comment section. And you know what, I would love to share with you guys and kind of hear which kind of stocks you guys are following, so we can share and we can communicate and all this kind of stuff. And also, if you guys didn't subscribe for this channel, please go ahead and subscribe, hit the like button. That'd be always great. Share with your friends and family and anyone, just to kind of, that'll be fantastic. So so that's about it, guys. Thank you very much for watching this video, and have yourself a wonderful day.